Today we got manufacturing numbers in, and already in just year one, we're already starting to see massive results. Factory orders up 5.5%. American Steel has exceeded Japan for the first time in 30 years. We got an aluminum factory coming in, John Deere, Whirlpool, Jeep, and Apple coming home. So massive stuff coming in. The manufacturing index was the highest it's been in a very long time. So really good news coming there. And then I wanted to play this click for you guys real quick on Peter St. Ong talking about the new Fed chair, because I've had a lot of questions. Is this guy a good pick? Warsh, is he? There's some people in like Rich Barris, people on Bannon's War Room are kind of not saying good things about Warsh. I'm telling you, I think Warsh is an amazing pick, and he's going to be exactly what we need to navigate these next few years. But anyways, here's a clip about Warsh, the new Fed chair.
Donald Trump has a new Fed chair, inflation hawk Kevin Warsh. The end of the road for Too Late Powell. Warsh was a surprise since he's by far the hardest money guy out of the candidates in question, so Warsh was pushing for rate hikes in the midst of the 2008 crisis. Indeed, a week ago, Warsh was just 23% on prediction market Kalshi before jumping to 93% the day before the announcement. So Warsh, the former Fed member from 2006 to 2011, meaning his biggest moment was the 2008 crisis. While he did support the bank bailouts like everybody in Washington, Warsh was one of the first to go hard money. Famously, in April of 2009, inflation was running just 0.8%, unemployment was at 9%. That's normally when the Fed goes zero rates and dumps trillions into markets. But Warsh was arguing for rate hikes and ending stimulus. This, of course, is the adult thing to do. Rate hikes are the fastest way to clear out the malinvestment garbage and any crash. Still, right now, hard money is not what markets were expecting. In fact, gold and silver have been surging for months on expectations the new Fed would be an easy money chump. Instead, Trump apparently appointed the hardest money guy since Paul Volcker, the hard money Fed chair who ended the 1970s inflation by hiking rates to nearly 20%. Now, this is all surprising since Trump has been on the warpath for rate cuts with Jerome Powell, calling him a moron, numbskull, even a nincompoop for keeping rates too high too long, which strangles the economy. So appointing Volcker 2.0 might seem off-brand. But there's two important details here. First, in recent speeches, Warsh has been pushing for rate cuts, so easy money, but paired with selling off the mountain of assets the Fed has built up with past money printing. This is called QT, quantitative tightening, and it means selling the $6.5 trillion worth of treasuries and mortgage bonds the Fed bought with its past money printing. Selling them cancels the dollars, which reduces inflation. Warsh calls this Robin Hood policy, as in giving Main Street rate cuts paid by Wall Street's QT, which cancels the inflation. In fact, you can get deflation if growth on Main Street goes high enough. This is the opposite of what investment banker Jerome Powell's been doing, holding rates high to strangle Main Street while buying more assets to keep Wall Street in hookers and blow. The other caveat is Warsh is very reassuring to financial markets, which...
Okay, so I wanted to play that for you guys because Warsh is a genius pick. He's exactly what we need. And it's pretty amazing how Trump pulled this off. There's a lot of people thinking like he was just left. Nobody wants to do their job. No, this is exactly what Trump wants. The guy who, so first of all, money printing. I hear it all the time. And the economy's going to crash or the stock market's going to take, they're just going to print. Well, Warsh is the one person who won't print. He, at least from the Fed. Did you hear what Ong just said? He said that Warsh will cut rates, but he'll also tighten. He'll do quantitative tightening, not easing. Easing is what the Obama administration did, where he had the Fed buying trillions of dollars of assets out of the stock market, pumping the markets full of money and getting us into ultimately this huge inflation spiral, which culminated because of COVID. Warsh is the opposite. Warsh hates the idea of too big to fail. He's on record saying, I don't believe in that. He hates the Fed holding all this capital, and he's totally fine which is what Peter also just said, with the markets going down, as long as it's good for Main Street. And this could cause deflation, which I've been saying Trump wants to get to. Guys, we're looking at an entirely different Fed, which means if Warsh is in charge and there's a market downturn, means there's not going to be any money printing, because Scott Bessent isn't going to be a big money printer, and neither at the Treasury. And then Warsh is not going to do quantitative easing. He actually believes in tightening the belts and raising the rates when things go bad, which is what exactly they should have done, which is what Volcker did in the 80s to cause the huge boom into the 90s. So Warsh is an incredible pick. And I do not understand all the people against it, except unless, especially MAGA people. And this is one thing, like, again, I've been telling you guys, keep your eyes open on all these influencers, even ones we might trust because they've been MAGA or whatever. But like people like Rich Barish, Steve Bannon, like, especially Barish was like saying that Warsh is a terrible pick. He's not MAGA. I'm like, how is it not MAGA to want responsible fiscal policy that will actually be better for Main Street, not Wall Street? I don't understand that. Warsh is the guy. He's not a Keynesian economist. He is the first non-globalist, non-Keynesian economist since I don't even know, like, to run the Fed since, I guess, Volcker. Maybe, and I thought Volcker had some ties too. Now I know some people are like, "Oh, he's a Bilderberg group. He's Bilderberger." Dude, he was in his 30s and he got invited to go up there. I mean, if you're in finance, you're going. It doesn't mean you're one of them. It doesn't mean you're one of the power brokers. So, again, there's so much noise out there, and it's just because association, it doesn't make you guilty. It doesn't mean you're one of them, just because you hung out at one point. So, we got to use our brains. We got to look at what's going on. I think this is a fantastic pick, and I think it's just going to lead to that golden age economy that I believe is coming. It's starting this year. By the end of the year, I think it's having started. The economy is going to get much better. And now we have Warsh in charge of monetary policy along with Bessent at the Treasury. That and Trump at president, that's a dream team for building out what I think could be the best economy we've seen since the 1800s. I'm not even joking. It's going to be incredible the next few years. I really believe that. So